things are starting to look scary out there, and I completely can sympathize with anyone who's feeling kind of bearish in this time. I'm going to talk about a few different things that I'm looking at right now and narratives to go along with that as well. So I'm going to start with the US dollar index, the DXY here. If you guys have been following my work for a while, you know that I called the top of DXY pretty accurately. And I thought, and I do continue to think that on a technical level that it was going to continue further down. There's a narrative out there like dollar milkshake theory, and that when economies become weak, the world reserve currency pumps in value, and I completely understand how that works, and I get that. I just feel like economies are going to start breaking if they do pump the dollar strength does continue to accelerate to the upside. I mean, you're already seeing it around the world. I think they're going to have to do something like the Plaza Accord that they did in the 80s. Otherwise, you're going to see other currencies like completely capitulate against the US dollar. If we look at the DXY on the weekly time frame, it does look quite strong in a technical sense. It's come down, it's held support around this level here, which is the 104.5, and we are now testing again the top of the range. The only thing I would say is that we've had the daily/weekly close, and it hasn't actually managed to break out of this range yet. So right now it's just another test on that range. It does have a bit of space to go with the RSI, so it could come above and potentially set a higher high here, higher high than we did in April, and still form a lower high in the RSI, creating a bearish divergence. I mean, that's a possibility. Something that I am particularly looking at is the US dollar against the Japanese yen. The Japanese yen has closed at the weakest level, basically not in history, but for the last 30 years against the US dollar. Look, if we look on the weekly time frame, you can see the last time we closed at this level was in June of 1990. If we look on the daily time frame, the Japanese yen is also creating potentially a bearish divergence here, with the daily close being where it is and the RSI being where it is. Look, if we look, the RSI is creating a lower high. Potentially, it's obviously got to reverse first before we can confirm this. But the reason I point this out is because this level here was when the Japanese government last intervened. They intervened by buying back yen / selling dollars, which brought the price of the yen down. Well, obviously, we wicked all the way up here. But in the space of a few days, they brought the price of the yen down by 5%. Now it's a Friday, markets are closed. These are the sort of times where it's most effective to be making decisions about currency markets because the markets are closed. So I would have thought maybe Monday morning they might intervene again. And this is something that gives me strength is the wrong word, I guess, but it gives me some optimism in the markets. It's not on a technical level specifically. Well, I mean, it is on a technical level, but it's more like looking behind the curtain at what governments are going to do here. They can't let the yen run away in terms of weakness. Japan are like the biggest US debt holders at the minute, or one of the biggest US debt holders. At some point, they will start to sell down on their treasuries and redeem them for dollars, and then that obviously sell those dollars to buy back the yen. So that'll put downward pressure on the dollar potentially, but also then that means that US dollar debt is going to be getting sold off and bonds will probably run wild. You probably break the bond market if they started to do that, because China might then follow suit because they don't want the yuan to be in the position that it's in either. So it's quite complicated in the world stage in terms of like currency markets. So what I'm looking for is some sort of swap line or dollar liquidity injection or dollar rebalancing to solve this problem, because otherwise we could see wider problems in the market when the yen is challenging a 30-year resistance level. So that's definitely something to keep your eye on. If it breaks out, I honestly don't know what that really means for the markets. I made a tweet yesterday, the day before, talking about gold. I talked about gold, and I talked about it on the 3-month time frame. Actually, I think I put it in the newsletter, which is being released today. So this is some early alpha for you guys, but it's definitely worth a look at. If we look at gold, it's actually in a level on the 3-month time frame that we haven't seen, or like we haven't seen this sort of price action with it moving into the overbought area on the RSI since well, October or July 2005. Yes, we did wick up into that area here. Then we had like some resistance. We held just below the 2000 level. We broke above that 2000 level now with some strong volume on the breakout. If we can continue, we could see some price action like this, and it's almost incredible to say. And like it could lead us to a $10,000 gold. And I don't really know what that means for economies. Genuinely, something that I think I did tweet about it as well, but it's something that I think is very feasible looking at the technicals on this. We've got a nice cup and handle happening here, or cup and sauce, or whatever you want to call it. Could break out to $3,500. And once we're up there, we're going to be in this oversold area, probably backed by a lot of volume. And what does that mean for the world in general? Does it mean that the dollar's weakening? It probably does mean at least a little bit the dollar's weakening. Does it mean they pumped a lot of dollar liquidity into the system? Does it mean that currencies are debasing in general? Are we about to see a massive acceleration in that sort of area? And I think that that's a high possibility. In regards to crypto specifically, something that I'm looking at is that, so I'm moving on here to the tether dominance or USDT market dominance here. Something I've talked about a long time ago. I talked about this back in like June, I think, of last year. Yeah, June of last year, I started to tweet about this, saying that, look, I think that tether dominance is going to start to drop. We're in an ascending parallel channel. It's a bearish pattern. It's struggled to break above that 8.8%. We broke down out of that bearish pattern. We were hitting resistance here. We've come back up. We're now we lost that as support and hitting it again as resistance. And I think we'll continue downwards. So that's bullish for crypto. That means that people are probably going to deploy their stablecoins into the market as global liquidity ticks up. Maybe some interventions like with the US dollar. That's why I feel super bullish now. Like if you look at things, it looks bleak. It feels bleak. Perfect time for some sort of catalyst to happen that people aren't expecting. And we start to see a run up. Like if we look at things like as I said, the USDT dominance chart, if we look at what's happening with the Japanese yen, things have got to change or things are basically going to collapse, is my thought process. So I feel things will change because I don't think they'll let it collapse yet, while they still can do things to stop the collapse. That's basically my very easy logic on everything. Other than that, though, I'm with you on a sentimental level. It feels shit. It's boring. Chop is hard. It's negative. But nothing's really changed in terms of structure of the market. And I just wanted to come on and talk to you about that, basically. That's all I wanted to really share with you today. I talked about in my newsletter as well, I think, and maybe on tweets, this structure looks very similar to USDT dominance, Bitcoin dominance. We've had that parallel channel. We're struggling to break above a resistance level. Can we break out the bottom of this channel, retest as resistance, and then head down to give us an alt season? That's something I'm looking for as well. It'd be great if Bitcoin could rise at the same time we go into some sort of massive euphoria phase for crypto. Let's see what happens. Eyes on USDT dominance and eyes on currencies around the world in general. I think that's where we're going to start to see our indicators. Maybe some sort of narrative to shock risk assets back into a big push, or risk assets, I mean crypto specifically. The stock market's doing all right, basically held up by Nvidia, but maybe that's a new paradigm, or maybe it's a big bubble. But if it is a big bubble, I don't think they let it collapse because everyone's so leveraged up against each other. Everyone's tied up with each other. If one currency collapses, one country's economic system collapses, they all go. So that's why I think there could be some sort of agreement on the dollar or something that happens that changes the way that the market looks, and all of a sudden everyone's going to be like shocked by this agreement, but the charts are telling us something's coming. It's just whether it's going to be a collapse or a massive pump of assets, and I feel like it's going to be a massive pump of assets because if you look historically, that's what normally happens before a collapse. We go into that like parabola phase, euphoria. Could go on for years as well, especially when the debt's as high as it is now. If you look back at the roaring 20s, it went on for 10 years there. Massive pump. And now we've got like, what, $30 trillion of debt just in the US or whatever it is. So we're massively leveraged up to our eyeballs. And in that era, when we've got more debt than we've ever had, surely the pump goes on for much longer. That's my thought process. Let me know what you guys think in the comments. If you enjoyed the video, please subscribe, share with a friend. Peace up, A-Town down, as Usher would say.